Hey everyone, welcome. My name is Courage and welcome to Trading with Tan. Here we are dedicated to make you traders, right? It's cool. Okay, so in this video, what I'm going to do is I want to show you a simple strategy that you can use in the market that uses only price action. This strategy only uses price action. You cannot trade this strategy with indicators. We are not going to do any indicators. You're going to use only price action. So for you to trade this strategy, you need to be able to identify three things. Number one, you need to be able to a trend correctly. You need to be very good at reading trends, and also you need to be good at identifying and drawing support and resistance. And then also you might need to be good at also candlestick patterns. For this video, what I'm gonna do is I'm gonna use what is called the TAE formula. So I'm going to use what is called the TAE formula. So the TAE formula simply means we first need to identify the trend. And then after we identify the trend, we need to identify the area of value. And the area of value for us is the support and resistance. And then E stands for the entry of the when do you exactly enter into the market. So I'm going to show you this 3-step formula. So first of all, we need to be able to identify a trend using price action. So how do you identify a trend using price action? You simply identify a series of higher highs and lower highs. So this is called a higher high, and this is called a lower high. And this is the higher high, lower high, higher high, lower high. This is how you read a trend with price action. So if you look at this, you are going to see this is an uptrend because we are having a series of higher highs and lower highs, and the market is going up, right? So in this market here, in this market, which one is the best point for you to buy? I would say for the best point for you to buy in this market is this point right here, or this point right here, or this point right here, right? But how do you know about these points right here? This is where we put other things. So first of all, we identify the trend. Then the next thing is we need to identify the area of value, right? But before I go into the showing you the area of value in the trend and when do you buy, I want to talk about to you about what is one of the biggest mistakes that I see people making when they are trying to identify trends, right? So when people are trying to identify trends, everyone can identify this. So let's draw here. Everyone can identify this. Right, we can identify this seeing higher highs, lower highs, higher highs. If it's a downtrend, everyone can identify this symbol, right? But when the market starts doing what the market usually does, right? So when the market starts doing what it usually does, the market moves like this most of the time. It makes an impulsive move. So the first move that goes here is called an impulsive move, and then this one is called a pullback. So I have all this in detail in the Forex Master course. If you haven't, I've seen most of the people have already got their hands on the course, and I'm very excited about it. So if you haven't got it, I'm just going to tell you how to get it later, but you can just come to my inbox. So we call this an impulsive move right there, and then we call this a pullback. Now when the market makes another impulsive move, and then the market will start doing this, and then it does this, people will get confused right here. What is it that the market is doing, right? Because you this one you can identify it easily, right? But if when you start seeing these small lower lows and higher lows in these pullbacks, most people get confused in that market, right? But today, the best way that I want to show you for you to be able to identifying the trends is having some rules to it, right? So what are the rules that we put here? We want to put a rule of saying, okay, if we see an impulsive move and a pullback, right, and another so if you see an impulsive move like this and a pullback which is like this, right, for us to confirm this trend, we need to see the market breaking past this recent higher high here. If the market doesn't break past that, and even if it does this, we are still not in if confirming the uptrend, because the market haven't broken here. But if the market breaks past this one here, right, we have broken our higher high. Now we have a new high. That's why it is called a higher high, because we are breaking the previous higher high. And then if the market does anything here, even if it does this, if you haven't broken this lower high here, right, this lower high here, if the market haven't broken past this lower high, we are still in an uptrend, because firstly we have seen this higher high and we have now a new higher high. So whatever happens here doesn't matter. We're only focusing on this one and this one. So if the market moves up again and break, let me put red here, and break past this zone right there, that's when we know that the market have broken past the recent higher high. So the trend have continued from here. So whatever happens here, don't get caught up and start thinking it is a downtrend, so you need to sell. No, you need a downtrend will only come after the break of previous high. So for example here, if the market doesn't come to break past this lower high here, anything that happens right here doesn't really matter, right, until we break past a recent lower high, right? So I'm going to show you what I mean here in this chart right there, right? So here we see the market making a strong move down, right? And then it moves like this, it moves like this, it moves like this, right? So since we were moving from this point here, what is the lowest point that the market got to? Is this one. So we call this a lower low, right? It's the lowest point. And then the market makes another impulsive move and break past this lower low here, right? And now it pulls back, right? It pulls back. If it doesn't go and break past here, we are still in a downtrend. And now the market, what it does next, it moves down again, breaking past this lower low, right? So this was another lower low right here. So when the market breaks past this lower low, now we have a new lower low. So when now the market is now moving up again, right? If it doesn't break past this recent higher low here, right? Because this is called a higher low, this is called a lower low. So the market makes a lower low, a higher low, lower low. So what my point is, you need to just mark out the recent lower highs and lower lows, right? And if the market doesn't break past the higher low, the market is still in a downtrend. And if the market breaks past a lower low, that's when you confirm the continuation of that trend, right? So for example, here we see the market again moving down. Now it has broken past this lower low here. Now that's when we confirm the trend, right? And now we see another pullback. We mark this lower low, and if the market comes here, whatever happens here, if we haven't broken past this zone here, we are still in a downtrend. So I hope you can easily understand what I mean here, and you can easily see why you need this, right? So in this chart here, let me just show you the strategy that I was talking about. So we said we need the TAE formula, right? So first you need to know the trend, right? So once you see the trend, it's a downtrend, right? So this trend from here, let's say from this point here, we saw this strong move here moving down, makes a pullback, right? Once it makes a pullback, we mark out this zone right there, right? So what I wanted to do here is, okay, we mark out this zone right there, right? This is the zone where the market reversed on, right? We are waiting for the market now. We said we see the market moving here, makes a pullback. Now we are waiting for the market to break past this recent level, that recent lower low here, right? Because this recent lower low here where the market reverses, it is what we call our support or resistance level. Because if the market is moving, let's say up, and then it reverses, it simply means we are paying attention to this zone. This is our next resistance zone, right? So if the market comes here to this point and breaks past this, so it simply means it's continuing this trend. So here, this is where you see the trend continuing. And now what do you see next? You see the market pulling back into that zone here, right? So from the TAE formula, we have the trend, the downtrend, right? We have the area of value now. It's an area where the market breaks past and then pulls back into it. And then now we are looking for the entry. The trend, we saw it, the area of value, we have the support level. Now we are looking for the entry reasons, right? So if you manage, if you teach yourself to trade with rules, just like what I'm showing you here, you are going to make better trading decisions, and you are going to make trades that are not going to make you lose your mind when they go against you. You just know that I have some rules, so you're just following the rules. So now we see the market moves here, it's breaking past. Now when the market broke past this zone, it comes back into this area of value here, into this area of value. So once the market comes into this area of value, what are you looking for now? For the entry, right? So we have the T for the trend, we have the A for the area of value, which is our support level here. And now the entry, we are looking for candlestick patterns or chart patterns, right? So candlestick patterns, for example, here, what do you see? If you already know, if you already have known how to trade candlestick patterns. If you didn't, it's all in the Forex Master course. I'll put the link after this session, and also you can see the link. I think it's in the group, right? So now you see a bearish engulfing candle. You see a bearish engulfing candle. Now we see the market moves back into that zone, and once the market is in that zone, we see a bearish engulfing candle, and we sell at this point, right? Once we sell at this point right here, where do you put your stop loss? Above your support level. And then where do you put your take profit? 2 times or 3 times the risk. So if you risk 40 pips here, it simply means your target should be 40 times 3. That should be 120 pips. All right. So I don't know where the 120 pips is right here, but if you risk 40 pips, you need to make like 120 pips or 80 pips at least, so that in a long run you are going to make money. Right now, what happens next again after this move here, right? So let's say you missed this one, the market moves down, it comes back into that zone. This is the same zone here, and what do you see here? This is called a hammer candle. We also the top 3 candlesticks that I always talk about, that I talked about also in detail in the course, is the bearish engulfing candle. I would say the engulfing candles, the hammers, and the shooting stars, right? So we have the bullish, bearish, we have the hammer, we also have the shooting stars, right? Now, when the market, when you see this candle here, the hammer, you would sell at this point. This was going to give you a nice trade, because you would sell at this point after the hammer. You put your stop loss, and then you put your take profit 3 or 2 times the risk, right? So the method here is simple. You just need to be able to draw the trend and identify the trend. Let me show you another example. After that happens, the market makes, so we said here, the market moves here, it breaks past, created a lower low. Now it breaks past here, it created another lower low here, and then it broke past this lower low. Once it breaks past this lower low, what you know here is this market is continuing the downtrend. First, you need to confirm the trend. Do not trade without confirming the trend, right? So do not trade without confirming the trend. So when the market pulls back into that zone here, well, it comes back straight into this zone, right? It comes back straight into this zone here, right there, right? And when it comes into this zone, what do you see? Let me zoom this in. What do you see right here? Another bearish engulfing candle, confirming to you that the market is likely to reverse from this point, right? And for you to be able to draw to trade this strategy correctly, once you identify the trend, you also need to draw this support and resistance as a zone, not as a line. And the quick hack that I'm going to teach you here is, if you are drawing this, just take the rectangle to draw the size of the last candle of the pullback that you are taking as your support, right? So what I'm talking about is this. You see this candle right here. Let me do this. You see this candle right here. This was the last candle of this small pullback that happens right here. So I will take from the top of the candle to the bottom of the candle, the body and the wick, all of it, and then I will draw my zone based on that, with that exact same size, right? This is exactly what I do. So here, I was supposed to draw this candle, because the last candle right here, let me show you this. The last candle here was this red candle. So this was going to be from this point to this point. And then that's the size of my support and resistance. That's the size of my support and resistance. Just a rule. So you can see that from this point here, the market makes an impulsive move here. You see the impulsive move. And you see that this trend has been broken, because you can see that here is our last pullback. This was our last pullback, right? Right here. This was our last pullback. So when the market started moving up, it moved up and break our last higher low right there. This was our last higher low. So it break past this higher low. So this trend is no longer the downtrend now, because we said if the market is moving up, if the market is moving up like this, like this. If the market breaks past this zone right there, if it comes down and break past this zone, it simply means we are no longer in that trend direction. It's just the rules, right, that you can give yourself, and this is the rules that I need to follow, because what I know is if you want to be successful here, you don't want to guess things out. You need to give yourself rules that you follow, that you say, okay, if I see this and this, and your rules need to be objective. You don't just say, okay, if I see something like this, you just say, okay, if the market breaks to this point, and then I'm gonna do this and this and this and this. If that it doesn't happen, you don't trade, right? So now here you can see the market makes a move up, makes a pullback. Now another move up, breaking past our higher high. Now it creates a higher high right there. Now we are in an uptrend, but we see a pullback. Once we see a pullback, where does this pullback come into? Let's draw it out, right? You take this candle. This was the last candle. The last candle, the pullback. You draw your support level, right? So when the market comes back into the support level here, here's some rules that you can use. You can say, okay, when the market pulls back into this zone, what I need to see is a week of if any week of the candle comes into this zone, I know that the market have reached the zone. But if any candle closes below the body of the candle, if the wick can go past this, the wick can go past the candle, but the candle cannot close below this zone for you. It might close, but if you see any candlestick pattern after that happens, then you can have confidence. Now the market pulls back into this zone, and what do you see at this zone? If you look at this, you are going to see a lot of rejection candles. These are all candlestick patterns, right? These three candlesticks here should have given you the confidence of buying this market. If you were trading this strategy, you would buy somewhere at this market at this point. You put your stop loss below the support level, and then you put your take profit 3 or 2 times the risk. The reason why you can be confident to put good risk to reward ratio here is simply because this is a trend following strategy. So once you ride a trend, you need to be in the market for as long as possible. Now, the next thing that happens after this one is market pulls back here, makes a strong move, and we created a zone here. But unfortunately, the market doesn't come into that zone, and it went up again. Now, what do you see here? We see that the market created a higher high here, and then now it comes to this point here, and now it makes a pullback. So this pullback was like this, but we said if the market doesn't break past the previous higher high, then we are still in a pullback. So now we see the market coming back into this zone here, and then once it comes into this zone, you draw your rectangle support and resistance, and then you see the market coming into that exact same zone right there. And then once you see that, if I remove this one, you are going to see the pattern here. This is called this is some kind of like a hammer, but it have a big body. But you can see that the market open right here, moves all the way down here. I'm not going to go deep into candlestick patterns because I have all these things in the course, right? It's very affordable. You can get it. Everyone can get that course. I believe that. And then now you can see the market moves all the way up to close at this point here. So this was where you were going to be buying. You put your stop loss down below here, and you take profits 2 times or 3 times the risk. In this case, you would make money. Right, so you can see that I'm not just picking up this, I'm just showing you exactly what the market does right here, right, using the TAE formula. The trend, you know the trend, you need to be able to draw the trend, right? You also need to be able to draw and identify support and resistance level, and also you need to be able to trade to see candlestick patterns or chart patterns, right? Some of these are going to come in chart patterns, but the candlestick patterns are the easiest one here. Now we can see another one. The market moves moves below, breaking past, comes back into this zone here. So it didn't come directly into the zone, but it created a bullish engulfing candle here. You were not going to be able to trade here at this point. And also, if you had drawn your support zone here, you were not going to be able to trade again. It was a good trade, but you wouldn't trade because there is no candlestick patterns here to show you this reversal. We have a hammer, but it happens a little bit too late. You can see here we have this hammer right there, but it happens too late. If one of these two candles was a hammer, then this was going to be a good time to place another buy trade. So you can see this is a very simple strategy. On the flip side of it, you can continue and continue and continue again and again, right? We are now we see we had this point here as our we have this point here as our previous level of structure here, right? So this zone was our recent lower high, right? We said if the market breaks past this zone here, that's when we confirm the reversal of the trend, and it happens right there, right? Remove this one. Let's see here. This was our previous lower higher low, right? So we see the market moves up and now it breaks past, simply showing you that we are now in a downtrend. It pulls back into this same zone, but you are not going to place a trade. But now it moves down. We are now in a downtrend. And once we see the market breaking past here and we mark out this zone right there, and then the next thing you see is the market moving down. And we said anything that happens here should not change what you think about this market. As long as we haven't broken past this zone, we are still in a downtrend. So whatever happens here doesn't have to concern you. We are still in a downtrend, right? So now I just removed this to show you this pattern, this candlestick pattern here. So where is it? It's right here. All right. So the market, we said we marked out this zone here, and then the market moves down. I said ignore this because we are still in a downtrend. This is the reason why I was saying you need to have rules for your trends. If you are reading trends, you need to have some rules. Some traders just come and guess, is this an uptrend? Is this a downtrend? Okay, you see these small moves here, you start thinking that the market is now in an uptrend. No, if the market doesn't break past your previous higher low, right, or lower high, whatever, if it is in a downtrend, it's a higher low. If it's in an uptrend, it's a lower high, something like that, right? I'm confusing these names today, but it's still okay. Now on this exact same zone, what do you see? You see a hammer candle, followed by a bearish engulfing candle, which is all selling opportunities. These are the things that shows you selling opportunities. So you are going to place a sell order after this hammer, let's say at the open of this candle, and then you put your stop loss above the zone, right? So if the zone is this big, you just want to make sure that your stop loss is above the zone. So let's say you were entering at this point. Let's say you entered late at this point. You just want to make sure your stop loss is above the zone. And the reason why this does is sometimes the market will just come back, retest that zone, and then move down, right? So this is the strategy that I wanted to show you guys. In other words, this strategy is called a break and retest strategy. It's popular. Most of you already maybe knew it, but you didn't know that this strategy plays out almost each and every time in the market. It plays out very, very often, right? I still remember I shared a signal based on this strategy. I think it was volatility, it was step index, right? It was step index based on this strategy. You can check it out on the messages. I don't delete the messages on the group so that if you are new, you can go ahead and see all the things that have been happening in this group. So guys, thank you for watching. Before you go, I want to invite you to join the Forex Mastery 1.0. This is where I go through all the things that I was talking about. In this course right here, I spend a lot of time explaining to you how do you master the reading of trends, like just what I was talking to you right now, and also how do you draw support and resistance, correct support and resistance. How do you do multi-time frame analysis? And we have four modules in that course. We have technical analysis, we have risk management, we have advanced technical analysis, and we have also trading psychology. So make sure to join this course. It's very, very affordable, less than $10. And also you get 2 books that are going to help you. The chart patterns guide, this one, you've got a lot of chart patterns that you're going to go through, and this one is going to change your mindset about trading. So this course is something like $9. Just go ahead and grab this course for yourself, and you're going to have a good time. The good thing is I'm adding up lessons. Today I created like 2 lessons. I'm just going to add them up at the end of the week. So once you get into this course, you're going to have a lifetime access to it. And I'm going to be always adding up lessons, right? So you're going to have a good time with this course. So go ahead and check it out. So thank you guys for being with me. So before I go, I just want to do some shout outs for